The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And as we start another wonderful program, Wednesday, November 14th, 2012, we have Sweet Pickle Day, zucchini pickles, all kinds of nuka, nuke-a-zuke, which are Japanese pickles. It is Pickle Day, National Pickle Day. I have to say that I don't like pickles, whether it's their shape or their color. I don't like vinegar, and I guess they keep them in vinegar. I have never liked pickles, but this is National Pickle Day, and they've got T-shirts on their website that allow you to show just how much you like pickles. I still don't like them, it's I guess some people, maybe they must be sweet, but I hate vinegar. Vinegar still makes me throw up. There's only a few things that can do that. Gin and vinegar. I don't know why. Maybe gin's awful close to it, but just always bothered me. Not much of a gin drinker, but how people can put away those, have a 3-martini lunch, it's always been beyond me. I'd hack and yak at the first one. But I guess if you're a pickle lover, you can do that. Of course, we're going to go on to some news here. Wanted to check in with the markets. We had the president making his first press announcement since like April. First time he's answered any questions. I got to listen to the first few before the show started to start, and he got a pretty couple of them right between the middle of the eyes from press people. Kind of a little upset that they hadn't answered them previously. He's been in meetings with some CEOs today, also having this press announcements. He sounded fairly agreeable, let me put it that way. It didn't come out. Unfortunately, that's not what's going on in the media, and I think that what has gone from concern is now going to go to actual fear in the marketplace, and that is because a lot of people that represent him are going a little bit nuts out here, and we're going to talk about that today. I know some of you probably won't agree with my assessment, but I think I'm going to give a decent argument about it. If you don't agree with me, I hope you won't do exactly what everybody else intends to do that I'm going to talk about today. First of all, Jim Cramer this morning comes out. He threatens CEOs. Basically, they were talking about making a debt deal, and if these CEOs stood in the way of what the current president wants to do, he's going to put them on his wall and make them pay for it. I think that's his exact words. So not only can you not disagree anymore, but they're going to come after you and put you on this little wall and complain about you and maybe try to get you fired. I guess that's the idea. It's so un-American not to agree or have a differential opinion. But to me, this is like the first signs. We've heard about it with certain groups and stuff, but right now we're starting to see many media people like tolerance, except if you disagree with anything they believe in. Last time I looked, it wasn't some kind of blowout election. It wasn't something that said you should just go home. Don't even bother showing up in Congress if you don't believe exactly what's going on here. That you see him, it's kind of funny because I forget what the Asian chick's name is that he's on the morning. Most times I never even watch. I just want to see what they're talking about, and then I'll check and see if stock's moving or if there's actually any news. I normally just have closed captioning on, but I went ahead and turned it off just to listen once I started seeing this little tirade, and then, of course, I've got TiVo, so I can just backtrack in a second. And she's basically saying, well, Jim, maybe you want to rephrase that a little bit. Maybe you want to pull that back a little. And I noticed that he didn't bring it up anymore when I went back and fast-forwarded it through. My guess is maybe cooler heads are going to start talking to him. But we are getting some people out here that are starting to throw bombs, and I'm wondering if this isn't the first steps of fascism. If we don't agree with you, doesn't matter. We've got the votes in Congress, that's fine. But anybody that voices opposition, we're going to destroy you. Getting a little sad out there. Of course, I've got no love for Jim Cramer. If you read the book that is his books, basically he tells you he's not a very good trader. If you read the book from his employees, basically he was a big inside trader. Once he couldn't trade insider anymore because of the laws changing right around the first part of 2000s, he decided to go and hang up his trader hat and let his other guys do it, and he went to CNBC. He can be entertaining like a dancing bear, but he wasn't the kind of trader that you see normally on it. He was one that took his fund almost twice to bankruptcy. If his wife wouldn't have come in, and you can read that in his book, and save his butt, he wouldn't be the guy that he is today. He is extremely politically cut in. In fact, he did a lot of work to make sure that, what was the governor's name that got thrown out for the prostitution? Spears, Spies, maybe someone can tell me about it. But without Cramer getting his money going, just funny. Anyway, that was the first thing there's about 3 things over the last 24 hours that just made my skin crawl, because one, I thought this country was all about free speech. It apparently isn't if you disagree with Jim Cramer. Then, of course, this quote comes out from Valerie Jarrett, the lead, advisor to the current president. After we win this election, it's our turn. It's payback time. Everyone not with us is against us, and they better be ready, because we don't forget. The ones that helped us will be rewarded. The ones who oppose us will get what they deserve. Boy, that's not filled with a lot of love and consolation. Trying to bring the country back together. Actually, it sounds to me like a good old-fashioned Chicago threat. Hopefully, we don't have that coming. And lastly, was Jon Stewart last night. Making fun of people that were firing, basically a guy in the coal mine said, hey, if Obama wins, I'm going to have to fire people. So he starts making fun of this guy, compares him to the pre-union days of the 1920s of throwing people in the mine and killing them. I call it Jon Stewart's cranial-rectal inversion, if you figure that out. But what's happened out here? You've got, if you're a coal miner, you basically 2-3 years ago had 500 power plants generating electricity. So what happens? Well, Obama wins. He decides he doesn't like coal. He pushes the EPA for tighter restrictions. We're down to about 320 power-producing coal plants. In 2014, that'll be down to just over 100. In 2018, there will be no coal-fired power plants out there. I think it was only prudent for the guy to start firing people as soon as he knew there was absolutely no chance in the next 4 years that coal was coming back, and in fact, his business was going to get smaller and smaller and smaller. In fact, Obama said that we were going to bankrupt any coal companies. I think it's, if anybody had a right to be mad, it's not this guy saying he's going to have to fire people. It's the guys whose business just got decimated because of a political wind change out here. But that didn't stop Jon Stewart. Maybe he had a few good points about some other people. But basically his thing is just suck it up. Well, this guy's not going to be able to suck it up. In 3, 4, 5 years, these coal companies are going to all be out of business. Unless they can export their coal to another country. Maybe there may be enough business in that to let a few of these succeed. But they're out of business. If you're watching on Tiger TV, you're going to see I've got a chart here. There's a website I go to. It lists all the SIC sector codes and which is the strongest and which is the weakest market sector in the markets. for the last 6 months, you're going to find the same one listed at the extreme bottom of the list. It's coal mining. So now, Jon Stewart has a big national stage, is able to denigrate this guy who's basically going to go out of business. Not a whole damn lot that the guy can do about it. But now he has to put up with this jackass saying that the guy shouldn't sell, he shouldn't threaten to fire anybody if someone wins the election. It's just going to happen. It was going to happen no matter what. And, I don't know. It just seems to me like if you have any thought of objecting to the political discourse right now, there's more than enough people that are going to come out and attack you, try to demonize you, and run you out of business. And I don't know, maybe it's just caught me all today. I don't watch all that much news. I tend to read it a lot. I just happened to catch Jon Stewart when I was thumbing through some of the channels last night. But I don't know. When did freedom of speech really become that scary? We're not yelling fire in a crowded theater. We're basically saying we have a different political opinion, and all you can do is be degraded, threatened, and, what else can you call it? Anyway, I found it very disappointing. You can always call me up and tell me why I'm all wet at 877-927-6648. That's 877-927-6648. Now, other things going on. Wednesdays and Fridays in expiration, you can always email me. Elliot Spitzer was the guy Kramer got into into power. Basically, it sounded to me exactly like a whole lot of that whole thing with the cattle futures in Arkansas, where a political appointee got a political gal, was Clinton's wife, ended up with making all kinds of money in the cattle futures. Not one loss. Of course, she'd never been in the cattle futures business before. Same kind of thing with Elliot Spitzer and Kramer. Kramer basically made him, not exactly sure if the same kind of thing, it was never investigated, but that was it. Thanks in the Den for reminding me who that was. Anyway, Fridays and Wednesdays in expiration. The pressures of expiration. Someone asked me to expound on this. You can always email me at path, P-A-T-H, at tfnn.com, and we'll be more than glad to look at it. But we were talking about, we had a caller yesterday about what the futures were telling us about Bank of America. And I said, normally what you find out and this is just, it seems like every week, if you go back and look through all the expiration weeks, probably in the last 10, 12 years, there is a tendency to find the low of the week or the high of the week about this time on Wednesday afternoons. You get a counter move on Thursday. So if you were headed up, then maybe you pull back. If you're headed down like we are, maybe this is the start of a bounce into Thursday. Then normally you see Friday expire at today's level.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pezzamento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
See the market weakening. It probably going to continue to weaken until the press conference is over with the president. That's not uncommon because they're always waiting for him to say one wrong thing, especially in a market that's weak like this. The idea is maybe he says one wrong thing and spooks the market, so that's normally weak. We are seeing the lows of the day in here, and we're seeing volume slightly increase from yesterday. We have about 2.5 billion shares in the marketplace. Won't be too surprised to see when he is done speaking this probably get a little bounce out of this market. A lot of people just trying to pull in a little bit before the end of the day. 2.5 billion shares probably points to something like, at this time, what do we have? 225, 3.3 billion shares on the consolidated tape, which is actually a little bit of a pickup. Of course, we've had fairly light weekend out here, but we are pulling back. I'm going to get to it in probably the first chart. We've been talking about it for almost 3 weeks now, and that is this market wants to pull back to 1350, and that's going to be the first level of decent support in this marketplace. Those confluence numbers work extremely well in very certain circumstances, and this is one of them. One of the other interesting things out here is that we've got crude up about 83 cents, although we've got a lot of stuff going on in the Mideast. The Israelis don't know exactly how they did it, if they put a bomb in the car or what, but there was video out of it just after about probably 1 o'clock, right around 1 o'clock. where they blew up the Hamas military leader, kind of like the chief of staff. They tried once before, killed his son. This time they apparently got the guy. Of course, this is a guy that's more than glad to kill off women and children and as many other people as he could. So probably not a bad day, especially that they went after 20 different locations of shooting in missiles. I'm not here for world events so much as the fact that most days this would have made the market pop fairly decently in crude, and we're only up about, it's been up 80, 90 cents or so, $86.25, $86.27. Crude really looks like it wants to get back into that 82 level, something like that, very close to that level. And, you know, it's, it's kind of hard to see that we aren't going to get in that level. I would expect that this market most days would have really started to run, especially with the amount of shorts I suspect that are in the crude market. Just kind of interesting going on out there. There's numbers out from Statistica that show the income from U.S. Newspapers and magazines. Fairly interesting. Actually, in 2012, this is the first year that we find out that Google's actual earnings, although they had a much bigger earnings in 2011 for their ad sales, is now over all magazines and newspapers in the U.S. This is just in U.S. sales. So kind of interesting to see why the dollar amount has pulled back fairly significantly. I don't think this is year-in numbers. I think it's numbers so far this year. So we still have a couple of months to go, and maybe these will look a little bit better. But are we getting a pullback in advertising? Yes. But it's if you want to really see the death of newspapers in comparison to online style advertising, this chart fairly significant. You've got about $20 billion and about $18 billion for combined U.S. newspapers and magazines. I guess that's actually Google worldwide. But we've got a couple more months to go before that's finalized. But it's going to be kind of interesting. I guess I wonder if they have a lot of seasonality to their earnings. Just how bad newspapers and magazines are going. Kind of interesting. Baidu is out, and they have slower rates of growth, but not a lot going on in there. What I did want to do is get to these charts, at least the one I've been showing here for a while. I know we always get new viewers out here, so I wanted to get into the S&P chart as soon as I could. S&P 500. Not going to finish it up. We'll be back to that right after it. We're going to be doing a lot of charts today. If you have any questions about what I've talked about over the last few days, be certain to give me a call. 877-927-6648. 877-927-6648.
Heard Tom O'Brien on the air, and you've seen him on Tiger TV as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
We wanted to get right back into this because I've been pointing it out for about 3 weeks, mostly because it's one of the best examples of exactly what we look for in a thing called Confluence. Hopefully you've read Tom O'Brien's book, Art of the Trade. This is actually helped do the charts in that, actually just create them for the book, not find the trades or anything. But tried to set them up so we could show them fairly extensively. But Confluence is where two retracement levels are put together. And if you're not watching this on Tiger TV right now or in the den, hopefully you'll get a chance to go into the archive later. We're about 30 minutes into the show, and check out. You should see this S&P chart. I think it's well worth looking at. You get two nice retracements in the market, and this could still be an ABC up. I don't have enough time in here to really say what we have going on, but we basically the low retracement, or the 381 of one and the 618 of the other retracement will have a very narrow price band. And I'm going to wave my magic mouse over that price band. That's about right at 1350 on the S&P cash. Let me zoom in just a little closer there so everybody can see. When they're extremely tight like that, very small price range, You can see a bigger, fatter one over here. That's going to be more of a congestion zone than a real support area. What we have is 1350 on that, and what that pretty much suggests is that we should have very, very good support at that 1350. If that support breaks, then you have an extremely weak market, and I would suspect that we'd see 1266 within probably about 10 days after that level breaks, if you break it with some kind of volume. Right now, you know, we've been doing in the mid 3 billion shares a day on the consolidated New York Stock Exchange tape. If I saw that broke with something like 4.5, 5 billion shares, I would be very scared. I suspect that when we hit that 1350 level, and we're getting fairly close there, probably going to see it here in the next couple of days, and that's going to be probably your clue. The other thing I'm looking for is Apple to hit 422. Apple's probably going to be held up a little bit better than most stocks. They've been pretty much doing everything they can to halt the retreat. If you're in the military, when you sound retreat, you don't get everybody to take off at once, because all you're going to do is get shot in the back. What you do is leave a few people to shoot. You get everybody, or half the people, moving backwards. They stop, they turn around, they start shooting. The people up in front, they start pulling back. You have an organized retreat. A lot of times people in the market will call it an orderly sell-off. That means that there's no big surprises. I think what we've seen in here is just that, a orderly sell-off in Apple so far. And my guess is that Apple will put in its low somewhere around maybe 422. And that will be temporary. What we need is something to scare people. Good lows are made by fear, and we have yet to see any of that. Even today, as we continue moving down, what can we get out of the VIX? About 17 points. To me, this is just nuts. We should be in the 25s right now with the current conditions in this marketplace. I'm not exactly sure why the VIX is showing these numbers. I'm going to have to go back and figure out again. I've got a spreadsheet on how it's calculated. But to me, you know, we've had a market moving down, and the VIX continually refrains from actually doing anything. And until it does, until we see some kind of washout in Apple, until we see some kind of fear, it's very tough for me to think that this thing and the market is not broken. We continue to see stocks slide. Phony press articles are not anything new. They're a little bit heavier during expiration week. A lot of times you'll see those. I saw one today, and it was all about, we checked the channel and everything looks good with this company. Now, did the company say anything? Was it any real news? We checked the channel. Well, how are we going to ever throw this guy in jail if it was a total lie? Well, you can't. So normally when I see some self-fulfilling article that has something to do with the press out there in the financial press that is basically parroting an article or a information that they got from a investment house, I generally pretty much know that it's probably not just wrong or a little wrong, probably a total lie. And if not, the company normally would probably say something about how we checked the channel. The reason I think it's a lie is, one, we saw fairly decent data this morning from retail sales. They thought it was supposed to be up 1.3%. It was actually off 0.3%, and we continue to see that kind of movement out there. This stock that I was talking about was in retail. I'm short it right now, so I'm just going to decline about it. But they were able to bounce it a couple of bucks. It's up about 50 cents now. That pretty much tells me what I need to know, and that is they've had a phony press release. Phony news. They ran the shorts out and were able to get rid of a bunch of stock fairly quickly by just going through all the stops. Now that it's not much higher than it was yesterday, and I don't have puts on it, so I can hold it as long as I want, I'm not going to get too freaked out. I'm actually making some decent money on it. But if you look into those news and why a lot of these stocks have popped, stocks like Facebook, there's a lot of different ways for them to come out and push it. My guess is that, like Facebook, it was probably it was a 10, 12, 13% short. My guess it's a little bit more. Can it pop $2 in a day? Yeah, and why did it pop? Most likely, there are still big houses out here with lots of shares of Facebook that they have to push off on the public. I don't have any problem with thinking this thing still goes to $10 or $8 over time, but it is going to take time until these guys get done distributing stock. The business of the stock market is not to make you rich. It is to push out and finance companies. And the Wall Street's job in that is to make a market for it, that people will buy something for it. So, when it went down to $19 or so, could that have been a big house out there shorting the living daylights out of it and then buying them all back in one day? A lot of times that's all it takes. You can manipulate a stock price for a while, but not forever. How long can this last? Maybe 2, 3, 4 weeks. But my guess is that Facebook is doubling the amount of shares outstanding, and it's only a matter of time before supply and demand catch up. We're looking at other stocks out there. I'm probably most upset right now at Microsoft. Not Microsoft, the company, so much as Microsoft, the weaselly CEO. I've been joined by the gentleman that won the Poker Tour tournament and that shorted CMG, and he basically, I guess, came out yesterday afternoon and reiterated what I thought, which is that, again, these CFOs make horrible CEOs, and he continues to be nothing but a caretaker. My guess is, and continuing guess is, they just fired the one guy that they needed to run the company. And, if you're a bomber and you've done poorly and maybe the market pulls back on you, you're circling the wagons now to make sure to keep these people off of you. If you get rid of all the people, you got somebody that can't just walk in and take over tomorrow. Of course, this guy probably could for a couple of weeks, but my guess is that a lot of these people are doing exactly what they thought that they wanted to do, which is both in Apple and in Microsoft now, which is get rid of anybody that could succeed you. No different than the king killing off all the brothers and sisters of his brother, so there's nobody in line for the throne. It doesn't do you much good if you kill off the king and your guy isn't there ready to take over. You go back to Caligula. All those kind of kings and emperors and stuff all kind of had the same idea. I suspect that there's not that much different going on from Ballmer out there as his head is on the chopping block. I want to look at a few other stocks. SkyWest, SKYW. This one's made a fairly clear and unambiguous sell signal. Normally when stocks break out, they try to come back there. In this case, about $7, $7.50 is a fairly decent gap. That gap up came on very decent volume on 8/8 with almost 1.7 million shares. We've got up to the September 14th high at $11.73 with 1 million shares. We pierced that and closed below it, giving you a fairly decent sell signal on SkyWest, because basically you had it come in with 360,000 shares, testing a 1 million share high. It's closed below it. You're getting the confirmation of that today. Not a whole lot of volume yet, but look for these stocks, if you wanted to buy this thing, to get back down into that breakout area one more time and test it, and then you might have a great trading range between that $7 and $7.50 range back up to the $11.90 range up here. What can you say? Those kind of companies are always out there. Radio Shack may have found its terminal low point. It is out testing the previous low out here at $2.01 from October 2nd that had 8.7 million shares. And coming into it over the last few days with in the millions, you're going to have fairly light volume today. A close back of 201 would probably put in a floor on this. Don't expect that much, but these percentage moves could be okay. If this thing could even just turn around a little bit, maybe even start a short squeeze, you might see 271 in it, which is a pretty decent short percentage move. I don't see the market itself really doing that much, but we will continue to keep an eye on it. I wanted to just check back in here with how the market is doing, because this does look fairly interesting. 1364 on the S&P cash, and getting to 2.7 billion shares. So I'm looking, 3.3, 3.5 billion shares on the consolidated tape looks likely today. Other stocks of interest out here that I'm looking at is Resolute Energy Corporation. Let me see. Let me redraw this here. And it's another one that looks like it could pop back up above the main low out here, which I'm looking at is the May 23rd low. That's at $8.09. It got tested on lighter volume on August 2nd. Did not pierce it. This is why you have to wait. Even though there's only 3 cents, it's only 3 cents higher on August 2nd. You need it to go below it, close back above it to get your signal that a long-term low has been made. It came in with low enough volume that it was going to bounce. It did. It's got a higher volume high out here at $10. Not a bad trading range out here. Resolute Energy symbol is REN. We are down at the lows. You would need this thing to continue on very light volume and have it close back above $8.09 to really see that maybe some of these things are worth buying. Another one out here that you got to, in fact, I'm thinking that 1350 level in the S&P could be what we're looking for. So as we do that, I'm starting to look at some of these stocks that look like they're pretty much sold out. North American Palladium, PAL, I actually hit this one a couple of times. It made some decent money, especially when this thing comes down to nothing. Anyway, North American Palladium, PAL, $1.47 on August 10th with 4 million shares. We've gone below that with 2.3 million shares, 2.4 million shares. Again, you're probably going to have a little bit of a confirmation. In this case, it's going to be a close back up above $1.47. But some of these, like this one, $1.47 to $2.28 to the previous high out there. There may be some nice quick trades setting up over the next week or so where you can make some decent money on the long side if you don't hang around too long. I suspect that we are headed lower, but if we do get in that 1350 level on the S&P, we see the volume dry up. I suspect that we're probably going to go back up to about 1385, 1390 on the S&P cash, and that will set up the next ABC down into the end of the year. Again, you could give me a call at 877-927-6648. That's 877-927-6648. If you call, we can get you in this last segment. If you have anything to take a look at. What do we have in CMS Energy Corporation? Another one that's looking kind of interesting. This one's actually already confirmed. I'm looking at a few of these oil companies that may have made some short-term lows. We'll finish up CMS when we come back from the break. Give me a call in the meantime, 877-927-6648. We'll be talking about your stock, maybe where you think, want to know where one of these stocks is going to expire on Friday's expiration. We're getting awful close with BAC. Looked like $9, and we're down to $9.12 now. We'll be back in a minute.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
We're going to go to a phone call here in just 1 minute. Had a first question from the den, which was take a look at SLW, and that is Silver Wheaton Corporation. Pretty clean signal out here that it's at least made a short-term top at $40.36 on February 29th. You had 11 million shares. You went over it with 4.8 million shares. We're going back into a gap here, but some nice energy on the way up top. But I'm going to say that this thing has made a fairly clean signal. This thing is headed lower. I'm going to take a look at it maybe later and tomorrow, but see if there's a better one. But I think that we're probably looking somewhere around the $36 level on Silver Wheaton here before there's the next chance to actually play it. We have a caller on the line, and it is Bill from New York. How you doing today, Bill?
Pretty good day. Yourself?
Another wonderful day in pickle heaven, apparently.
Yes, yeah, you got it down there, but not up here. Although it's a beautiful day here, we've had some bad weather.
Yep.
Yeah.
So what are we going to talk about today?
Skyworks International. Skyworks was SWKS.
Yeah, are you're talking about Skyworks Solutions?
Yes. Is this ready for a bounce?
If I got it right here, yeah, Skyworks Solutions. The chart looks very good. What doesn't look good to me is that you don't have the market behind you. I've done a lot of studies, and they're backed up by a lot of colleges and institutions and PhDs, and it breaks down to this. The market is about 50% of any trade you have out there. The sector is about 25%, and the stock's about 25%. So 75% doesn't have anything to do with this chart at all. So what you need to do is know that Apple is bottomed before you get into it. We also need to know that this stock is lined up. I like your call on the chart that it's back here at this gap up. What I dislike is that heavy volume down day, and that's on the 2nd of November. You had that huge volume day at 17 million shares. So you're at support. But what that's normally, those heavy volume down days, even at support, will mean that you're going to get probably another, I don't know, month of this thing going sideways until it consolidates and takes that energy out of the stock. So I would say that there are probably better stocks out in that sector that are not going to have to consolidate before they get ready to run here.
This is going to follow Apple, isn't it, this stock?
It is going to follow Apple. I'm just saying that on this particular one, it's one of the weaker ones out here. If I was going to follow one that followed Apple, I'd look at Qualcomm, a little bit better. I mean, Qualcomm's held up fairly well in this pullback. ARMS Holdings has been another one, and ARMS Holdings probably not an easy one to play out here. It looks like he wants to probably come back to this $28 level. But as long as we continue to see market weakness out here, but you know, could you see something in the sector in the next couple of days? Maybe Monday, Tuesday next week? I think you're close enough to probably play a bounce. I'd be looking for high short interest in some of these stocks. We've gone through them. I don't know what the short interest is on this one right now. But when we look at it, you know, there's a couple out there. Not a bad-looking chart. It's just you want to look at the rest of the stocks. The rest of them, besides ARMS Holding and Qualcomm, just don't look that strong. You want to look at Avago?
Well, I'm looking to buy a call on it and possibly for a bounce.
Yeah, you could probably get it, but I'm going to say probably Monday or Tuesday. This market looks like it wants to close lower here today, and it may get ugly into Friday.
Okay.
So I'm going to say, keep your powder dry right now. I need that 1350. You need 1422 on Apple. Test it. We'll be back tomorrow.
Okay.